Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into Next Level Charting. Thank you very much for joining us. I appreciate it. If you're watching this video on YouTube, and you like it, of course, please give us a thumbs up and consider subscribing. So today we're going to turn to gold and silver because we had gold breaking above the 200-day moving average last week. And so this is part one of a two-part series. Part one is available here on Next Level Charting, and part two is at TrendInvestorPro.com. So what we're going to do today in part one is test those crosses of the 200-day SMA to see how they performed in the past for GLD. I'm going to show you how to improve the results by adding just a little bit of smoothing, and then show you how to chart the difference between two simple moving averages using StockCharts ACP. And finally, we'll go into a little bit of analysis on the short-term situation with gold and silver and show you what to look for as far as a playable pullback, what that might look like in the coming weeks. And then we're going to end with a preview of part two, which goes to the trend composite. And part two, we test the trend composite signals and more. So I am working off of StockCharts ACP, and here I've got gold. This is just a close-only chart for the Gold SPDR, and we can see it making a big move and then coming down. This is the 200-day SMA in red, the 200-day EMA in green. And you can see we crossed below these two moving averages there in February, and then we crossed above them again here in May. And these are longer-term trend-oriented signals, and this is more like a trend-following strategy if you're following these moving averages. And so you can expect a lot of whipsaws. And the idea is that one good trend pays for them all. So what we're going to do is we're going to backtest these signals, the signals when you cross above and below the 200-day SMA and EMA. You're going to buy when you cross above, and you're going to sell when you cross below. And by doing that, it doesn't mean we're going to get the exact future told to us, but it does help us set expectations going forward. It gives us an idea of how many whipsaws can we expect, or what's the chance of getting a whipsaw? What percentage of the signals actually result in positive returns? What is the average gain on a signal? What is the average loss? And then what is the profit factor? And the profit factor is an important metric. It basically is the total dollars from the profits divided by the total dollars from the losses. So it's your ex post reward to risk ratio. So when the profit factor is above 2, which is what you want, that means your profits are more than twice your losses. And that's kind of what we're after. So let's look at some test results here. So now I'm moving over to Amy Broker, and what I've done is I've run the back test for crosses above and below the 200-day moving average. And I just want to show you some signals here with the red and the green arrows. The green arrows are the buy signals. The red are the sell signals. And this is a long-only test. In case you're wondering, you add short positions, and the test does not work near as good. This works best for long-only. And you can see here, when you're using moving averages, you're going to get whipsaws. You're going to get whipsaws with all trend-following strategies. And the idea is one good trend pays for them all, as I said. And you can see here, it would have been very frustrating. You would have had whipsaws in 2017 into 2018, and into 2019 you would have given up, and then you would have gotten the two big signals here and caught this bull run. So you had to go through quite a few whipsaws before you got this big trend, and that's kind of the way gold trades. A lot of dullness, and then all of a sudden it catches fire and you get a big trend. So GLD started trading in the middle of 2005. So I'm running this test from January 2006 until May 20th of 2021. Signals on the close, buy, sell on the next open. No commissions or slippage. This is just to give us an idea of what's going on. And you can see if you're buying and selling a cross close above and below the 200-day SMA, you have a win percent of 30%, much less than 50%, and that's because of the whipsaws. But the average gain's pretty good, around 10.5%. Average loss is around 1.5%, and profit factor's above 2. And then we look at the EMA, we can see it has a higher win percent, but the average gain is much lower, 7.6%. And the profit factor is a little bit higher than the SMA profit factor. So overall, I'll give this a push. They're pretty much equal. Now we can reduce these whipsaws by simply using a 5-period moving average instead of the closing price. So you can see here we got some whipsaws there in January, and then we got the 5-day going below the 200-day. In other words, we smoothed the closing price with a 5-day simple moving average. And then you can chart that using the Trend Investor Pro plugin. And this is percent above moving average. It shows the percentage difference between the 5-day SMA and the 200-day SMA. So it's green when the 5 days above and red when below. And you're still going to get whipsaws. You're not going to remove whipsaws from the equation ever. It's just part of the game. And so let's see how this tests for the EMA and SMA if we use a 5-day moving average to smooth out the close. So right away we can see there are a lot fewer signals on both, about half as many signals. So you would have been trading a lot less active. The winning percentage went down below 30%, so not a very high winning percentage. But look at the average gain. The average gain went above 21%. So by adding that smoothing, you were able to increase your average gain, and the average loss wasn't that much bigger. So it's still around 2 to 2.5% for the average loss. And then we look at the profit factor. For the buy-sell cross, when the 5 crosses above the 200-day SMA, you got a profit factor above 3. So given that high profit factor, I would say that this is probably the better of the two strategies. So as noted, that this indicator here, the percentage above the moving average, is available as a plugin, the Trend Investor Pro Indicator Edge plugin. And if you click over to the upper left, there's where you can access the indicators down there at the bottom if you have the plugin. And there are a lot of indicators there that will help you with your trading, trend identification, and signals. And the one I'm going to talk about in the next video is going to be the trend composite, which aggregates 5 signals from 5 trend following indicators. And it also triggered bullish. You can see it's different than this moving average crossover. And I'm going to put it to the test, and I'm going to analyze the long-term charts for gold and silver. So here is the main analysis page at trendinvestorpro.com, and we have a combination of free and paid articles or premium articles for subscribers. And there you can see part 2 on those signals and expectations for gold and silver. And we go into the trend composite indicator, its components, how it's performed in the past, the correlation with gold and silver, do we get any diversification really? And then long-term chart analysis for gold and silver. So here's a daily candlestick chart for GLD, and you can see it's up 13% since that late March low, and that's a pretty big move. And that's bigger than this move here, which is around 10%. So it is getting a bit extended short term, but it is by no means bearish, or it's not by no means looking vulnerable to a pullback even yet. And I'm not going to get into candlestick analysis because there's a lot of noise in candlesticks. You know, the last pullback we had was this little flag here. But at this point, I wouldn't want to chase gold from a short-term standpoint. If you're doing trend following, well, that's okay. That's a whole new story, another story, because you're going to be using a long-term trend following indicator. And with trend following, you expect to buy when it's overbought and sell when it's oversold. That's the nature. You're not going to get the bottom or the top. You're going to catch the middle if that trend extends. But when I look at a tactical situation for GLD, I don't see a setup right now, and I would be waiting for a setup. In other words, a pullback within an uptrend. And so I've got three indicators on this chart here that I'm going to be watching. The first is RSI, normal 14-day RSI. The second is the Commodity Channel Index, 20 days. And I use a bit of a longer setting for CCI because it's more sensitive. And then just the classic slow stochastic oscillator, 14 period. And this is a way to catch a short-term oversold condition that might lead to a bounce. And so what are we looking for here? Well, we're looking for RSI to dip into that 40 area. This is the 40 to 50 zone that is shaded. And typically in an uptrend, RSI will hold that 40 to 50 zone. When we look at CCI, we're looking for a dip below minus 100. And that will show a short-term oversold condition. And then we look for a move back above minus 100 as the early signal. And then the other signal would be the slow stochastic. And if it goes below 20 and then turns up and moves back above 20, that would be a bullish signal short term. Also, I'll be looking for things like falling flags, pennants, triangles, or wedges to form over the coming weeks. Now here is the silver iShares, and it's a bit different than gold on this chart. You can see it's just been in a trading range. And if you're in a trading range, then oversold signals work. But if you're in a downtrend like gold was, oversold signals don't work very well. And I've got the same three indicators here, but you can see here that CCI moving above minus 100 after becoming oversold can get you in for a bounce. Same here in late October, got a bounce. And then again in December. Then we look here in mid-January, preceded that bounce. Got another one there in March. This one didn't work out here in early March because we went back down, so not all of them are going to work. So again, I would be looking for CCI to move below minus 100 and then watch for that move back above minus 100. And with the slow stochastic, a move below 20 would show oversold conditions, and then a move back above 20 would show an upturn in prices. And then if we look at retracements, which may be a bit early, but if we move back into this 38 to 62% zone, that would also be an area to watch for potential support and a reversal. So if you'd like to know more about TrendInvestorPro.com, you can click on the link below in the description. Again, if you like this video, please give us a thumbs up and consider subscribing to Stock Charts. Thanks again for tuning in. Have a great day, and I'll talk to you again next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.